If I were starting to invest in 2026, I wouldn't follow the crowd or repeat the mistakes most beginners make. I'd focus on strategies that actually grow wealth, minimize risk, and take advantage of the trends that are shaping the next decade. From picking the right sectors to understanding compound growth, timing, and smart diversification, every decision matters. I'll show you exactly what I'd do step by step, what I'd avoid, and how I'd make my money work harder than ever before. This isn't theory, it's a real plan for anyone starting today. If I were starting to invest in 2026, I would do things differently than most people. I would not blindly follow trends, chase the latest hot stock, or get swept up in panic when markets fluctuate. Investing is not about luck. It is about strategy, patience, and understanding how money works over time. Most people make the mistake of thinking investing is only for the wealthy or that they need a huge amount of money to start. That is simply not true. What matters more than the amount you start with is the mindset you bring, the discipline you maintain, and the clarity of your plan. The first thing I would do is take a step back and understand the landscape. The world in 2026 is different than it was even 5 years ago. Technology is advancing at a pace that is almost hard to believe. Industries are evolving, and some of the most powerful investment opportunities will come from sectors that didn't even exist a decade ago. Artificial intelligence, renewable energy, biotechnology, and digital finance are reshaping the economy. But just because an industry is booming doesn't mean every opportunity is good. Research and understanding are critical. I would study not just the companies or assets, but also the trends, the challenges, and the long-term potential. Next, I would focus on building a foundation. This means having a clear financial plan, paying off unnecessary debt, and ensuring I have a buffer for emergencies. Investing without a foundation is risky. You need stability before you can take calculated risks. Once I have that, I would start small, consistently, and deliberately. The power of compounding is real. Even small amounts invested regularly over time can grow exponentially. I would not wait for the perfect moment to start because the perfect moment rarely exists. Action, consistent action, is far more important than timing. I would diversify. Too many beginners make the mistake of putting all their eggs in one basket, chasing one stock, one cryptocurrency, or one trend. Diversification is not just a safety measure. It is a strategy to allow your money to grow steadily while minimizing unnecessary risk. I would spread investments across different sectors, different asset classes, and different geographies. At the same time, I would not overcomplicate things. Simple strategies often outperform overly complex ones. The goal is to have a balanced portfolio that can adapt to changes without panic or impulsive decisions. Another critical element I would focus on is education. I would spend time learning every day, reading books, listening to experts, studying market behaviors, and understanding financial statements. Knowledge is the most powerful investment you can make because it informs every decision. With understanding comes confidence, and with confidence comes the ability to act decisively when opportunities arise. I would not rely solely on tips, rumors, or social media hype. Those can mislead, distract, and even destroy wealth if followed blindly. Mindset is just as important as strategy. I would cultivate patience and discipline because investing is a long-term game. It is not about instant gratification or quick wins. The market will have ups and downs. Economies will change. Companies will rise and fall. What matters is staying committed to a wealth, outplan, adjusting intelligently when necessary, and avoiding emotional reactions. Greed and fear are the two biggest enemies of investors, and I would guard against both. By staying focused, I can navigate volatility without panic, take advantage of downturns instead of fearing them, and let my investments grow steadily over time. I would also embrace technology. In 2026, there are tools available that make investing smarter, faster, and more efficient than ever before. Data analytics, AI-driven insights, automated investing platforms, and global access allow for better decision making than previous generations could ever imagine. I would use these tools to my advantage, but always with caution. Technology is a powerful ally, but it is not a replacement for critical thinking. Every investment decision must be weighed carefully, and every strategy must be tested against both logic and experience. Networking and learning from others is something I would prioritize. Successful investors rarely succeed alone. They seek mentors, learn from peers, and expose themselves to diverse perspectives. I would actively seek advice from trusted experts, analyze their strategies, and adapt lessons to my situation. At the same time, I would take responsibility for my decisions because ultimately, I am accountable for my results. Others can guide, but the final choice must always align with my plan, my risk tolerance, and my long-term goals. Finally, I would focus on creating a vision. Investing without purpose can feel like a game, but investing with a clear vision is empowering. I would define why I am investing: financial freedom, security for my family, the ability to pursue passions, or leaving a legacy. This vision would guide every choice, keep me disciplined, and provide motivation during challenging times. Every dollar invested would have a role in achieving that vision, and every strategy would be measured against it. If I were starting in 2026, I would not be intimidated by the complexity of the markets, nor would I rush. I would move deliberately, consistently, and with focus. I would educate myself, diversify wisely, embrace technology, build a strong foundation, and protect my mindset. Most importantly, I would start immediately. Waiting for certainty or perfect conditions is the fastest way to fall behind. The world moves fast, opportunities pass quickly, and those who act decisively are the ones who win. This is not just about money. This is about creating control over my life, designing the future I want, and harnessing the tools, knowledge, and strategies available to me today. If I were starting to invest in 2026, this is exactly what I would do: a careful balance of planning, learning, action, and vision. And the truth is, anyone can follow these principles. You don't need to be rich, you don't need to be an expert, and you don't need to wait. You just need clarity, patience, and the willingness to take the first step. Start small, start smart, start today. 2026 can be the year your money begins to work for you and the year you finally take control of your financial future. Follow the plan, stay disciplined, and never stop learning. That is the difference between those who struggle and those who succeed. And remember, the first step is the most powerful step of all. Forget old strategies. If I were starting from zero in 2026, I would not follow the crowd. I would not repeat the same mistakes that countless beginners make, thinking that investing is about luck or timing. Investing is about clarity, discipline, and understanding how to make money work for you over the long term. Most people believe they need a large sum of money to get started, or that they must wait for the perfect market conditions. That is a misconception. What matters more than how much you start with is the approach you take, the knowledge you apply, and the mindset you cultivate. The first thing I would do is pause and understand the financial landscape of 2026. The world is changing at an unprecedented pace. Technology, globalization, and shifting economic structures are creating opportunities that didn't exist a decade ago. Artificial intelligence, renewable energy, biotechnology, and digital finance are shaping industries in ways that are both exciting and disruptive. But opportunity alone is not enough. It is critical to identify where growth is sustainable, where risk is manageable, and where your resources will have the highest impact. Blindly following trends or chasing hype can lead to disaster. I would study industries carefully, analyze potential companies, and examine long-term trends. Next, I would focus on creating a strong foundation. This foundation begins with understanding my financial situation completely: debts, expenses, savings, and income. I would ensure I have a safety net before committing money to investments. Investing without a foundation is reckless because it leaves you vulnerable to emergencies or market volatility. Once the foundation is secure, I would start small but consistently. The power of compounding cannot be overstated. Even modest, regular investments, when managed wisely, can grow exponentially over time. Waiting for a perfect moment to start is a trap. The key is to start now, take action, and remain disciplined. I would diversify. Too many beginners put all their resources into one stock, one cryptocurrency, or one type of asset, hoping for a quick win. Diversification is not just a safety net. It is a strategy that allows steady growth while managing risk. I would spread investments across multiple sectors, different asset classes, and varying geographies. At the same time, I would keep it simple. Complexity often leads to confusion and poor decisions. A well-balanced portfolio aligned with goals and risk tolerance is far more powerful than chasing complicated strategies. Education would be at the center of my plan. I would dedicate time every day to learning, reading books, following trusted experts, understanding market trends, and analyzing financial statements. Knowledge is the most valuable investment you can make. It allows you to act with confidence, identify opportunities before others, and avoid costly mistakes. I would not rely on social media tips, hearsay, or short-term hype. Those can mislead, distract, and erode wealth faster than bad luck. Real understanding comes from consistent study, reflection, and application. Mindset would be equally critical. I would cultivate patience, discipline, and emotional intelligence. Investing is a marathon, not a sprint. Markets will fluctuate, companies will rise and fall, and economies will experience cycles of growth and contraction. What separates successful investors from the rest is the ability to remain focused on long-term goals, to act rationally instead of emotionally, and to learn from setbacks rather than panic. Fear and greed are the two biggest threats to wealth. I would guard against both, staying consistent in my strategy while adapting intelligently to changing conditions. I would leverage technology to make smarter decisions. In 2026, we have tools that were unimaginable just a few years ago: AI-powered analysis, automated investing platforms, global market data, and analytics that make decision-making faster and more precise. I would use these tools to my advantage, but I would never let technology replace critical thinking. Every decision must be filtered through careful reasoning and clear objectives. Tools are powerful allies, but strategy, patience, and judgment are what create lasting success. Networking and mentorship would be essential. No investor succeeds alone. I would connect with experienced mentors, seek advice from trusted peers, and surround myself with people who challenge me and broaden my perspective. Learning from others' successes and failures accelerates growth. At the same time, I would maintain accountability for my choices. Guidance is valuable, but the final decisions must align with my vision, risk tolerance, and long-term objectives. Taking responsibility for every step ensures that I learn and improve continuously. I would also focus on timing and adaptability. While I would not attempt to predict every market move, I would observe trends carefully, identify when opportunities are undervalued, and act decisively. Adaptability is not about chasing every new trend, but understanding how shifts in technology, politics, and global markets affect investments. I would remain flexible, adjusting my strategy intelligently while avoiding impulsive decisions. The ability to adapt without panic is one of the most powerful advantages an investor can have. Vision would guide everything I do. Investing without a purpose is random, but investing with a clear vision provides clarity and motivation. I would define why I am investing, whether it is for financial freedom, security, family, or legacy. Every decision, every dollar invested, would serve that vision. When challenges arise, the vision keeps me focused. When opportunities appear, the vision helps me evaluate them wisely. Investing is not just a financial exercise, it is a pathway to creating the life you want and controlling your future. If I were starting from zero in 2026, I would not be intimidated by complexity. I would embrace learning, action, and patience. I would diversify intelligently, leverage technology, maintain discipline, and follow a clear vision. Most importantly, I would start immediately. Waiting for perfect conditions or certainty is the fastest route to falling behind. Opportunities pass quickly, markets evolve, and those who act decisively are the ones who succeed. This approach is not reserved for the wealthy or the experts. Anyone can apply these principles. You do not need large sums, insider knowledge, or perfect timing. You need clarity, persistence, and a willingness to take action. Starting today, even with small steps, allows compounding, learning, and growth to work in your favor. The first step, no matter how small, is the most critical. Every decision after that builds momentum, confidence, and opportunity. 2026 can be the year that changes everything. By starting smart, being patient, learning continuously, and staying disciplined, you can turn small beginnings into significant results. Investing is not about luck, it is about strategy, understanding, and action. Follow these principles, stay focused, and you will create a future where your money works for you. Your choices reflect your vision, and your success is built on knowledge, not chance. Start today, educate yourself, diversify wisely, act consistently, protect your mindset, embrace technology. Seek guidance, follow your vision. These are the steps I would take if I were starting from zero in 2026. And they are the steps anyone can take to transform their financial future. The journey begins with clarity, grows with knowledge, and succeeds through action. Want to invest in 2026 but don't know where to start? This is the exact strategy I'd follow. Starting from zero can feel overwhelming, but it doesn't have to be. The key is clarity, a strong plan, and the willingness to take consistent action. Most people fail not because they lack money or opportunity, but because they start without a strategy, react emotionally, or try to chase trends without understanding the bigger picture. If I were beginning in 2026, I would start by focusing on what really matters: knowledge, discipline, and long-term growth. The first step I would take is to assess my financial situation completely. Understanding your income, expenses, debts, and savings is essential before making any investment decisions. Without this clarity, it's impossible to know how much you can risk, how much you should invest, or what your short-term and long-term priorities should be. I would also ensure I had an emergency fund in place. Life is unpredictable, and investing without a safety net is reckless. Once that foundation is secure, I would commit to a regular, consistent plan of investing small amounts, understanding that over time, consistency beats timing every single time. Next, I would educate myself. Knowledge is the most powerful tool an investor has. I would read books on investing, follow credible financial experts, study market trends, and analyze the fundamentals of companies, industries, and assets. I would avoid social media hype, rumors, and hot tips that promise instant returns. The market rewards patience and preparation, not impulsive decisions. Understanding how investments grow, how markets fluctuate, and how risk and reward are connected would guide every move I make. The more I understand, the more confident I become, and confidence allows decisive action when opportunities arise. I would diversify my investments. Putting all your resources into one stock, one cryptocurrency, or one sector is a common beginner mistake. Diversification is a strategy to protect your money, reduce risk, and still capture growth across multiple areas. I would spread investments across sectors like technology, renewable energy, healthcare, and global markets. At the same time, I would keep things simple. Complexity often leads to confusion and mistakes. A well-balanced, diversified portfolio is more powerful than chasing complicated schemes or trying to predict every market movement. Mindset would be central to my approach. Investing is not about instant gratification or quick wins. Markets will go up and down, and companies will succeed or fail. Patience, discipline, and emotional control are essential. I would guard against fear during downturns and greed during booms. Emotional decisions destroy wealth, while consistent, rational decisions create it. I would focus on long-term objectives, understanding that short-term setbacks are inevitable, but long-term growth is what truly matters. I would also leverage technology to make smarter investment decisions. In 2026, tools like AI-driven insights, automated investing platforms, and advanced data analytics make it possible to manage investments more efficiently than ever before. I would use these tools to monitor trends, optimize asset allocation, and identify opportunities. Technology is not a replacement for strategy or critical thinking, but it can significantly enhance results when used intelligently. Every decision would be informed, deliberate, and aligned with my overall plan. Networking and mentorship would play a critical role. Learning from others' experiences accelerates growth and reduces mistakes. I would seek guidance from experienced investors, listen carefully to their advice, and adapt lessons to my own circumstances. At the same time, I would take full responsibility for my decisions. Mentors can guide, but the final choice must reflect my goals, risk tolerance, and vision. Accountability ensures that I learn and grow from every success and failure. I would approach investing with a clear vision. Why am I investing? What am I trying to achieve? Whether it is financial freedom, security for my family, or creating a legacy, having a clear purpose ensures that every investment decision supports that goal. Vision provides discipline during challenging times, focus when opportunities arise, and motivation to continue learning and improving. Without vision, investing can feel random, reactive, or stressful. With vision, every action becomes deliberate, meaningful, and aligned with long-term success. Timing and adaptability would be important, but not in the way most beginners think. I would not try to predict every market movement or chase every trend. Instead, I would observe carefully, understand the factors driving markets, and act decisively when opportunities align with my strategy. Adaptability is not about reacting impulsively, but about adjusting intelligently. Markets evolve, economies change, and industries shift. The ability to adapt while remaining grounded in strategy is one of the greatest advantages an investor can have. Discipline in execution is critical. I would commit to a plan, follow it consistently, and review it regularly. Investments require attention, adjustments, and careful monitoring, but the core plan must remain consistent. Short-term distractions, market noise, and outside opinions must be filtered through the lens of my long-term objectives. Discipline combined with knowledge and strategy transforms uncertainty into opportunity. Finally, I would focus on action. Knowledge, vision, and planning are useless without action. Starting in 2026, I would take the first step immediately, even if small. Waiting for certainty or perfect conditions only delays results. Action creates momentum, builds confidence, and allows compounding to begin. Every decision, no matter how small, contributes to growth. The first step is the most important because it transforms intention into results and potential into progress. Investing is not a game of luck. It is a combination of strategy, knowledge, discipline, and consistent action. If I was starting in 2026, I would take a deliberate, informed, and disciplined approach. I would educate myself daily, diversify wisely, leverage technology, build strong financial foundations, maintain emotional control, and act decisively toward clear goals. Anyone can follow these principles regardless of starting capital, experience, or background. The key is to start now, stay consistent, and remain focused on long-term success. 2026 offers unique opportunities. Technology, global markets, and emerging industries provide avenues for wealth creation that previous generations could only dream of. But opportunity alone is not enough. Those who succeed will be the ones who combine strategy, knowledge, vision, and action. Those who wait, hesitate, or react emotionally will be left behind. The difference between struggle and success is not luck. It is preparation, clarity, and discipline. Starting today, even with small steps, sets the foundation for long-term wealth. Consistency, patience, and education allow compounding to work its magic. Discipline ensures decisions are rational, not emotional. Technology and mentorship accelerate growth. Vision gives purpose and direction, and action transforms knowledge into tangible results. This is the strategy I would follow if I was starting in 2026, and it is a strategy that anyone can implement to take control of their financial future, make their money work for them, and create lasting success. Start small, start informed, start disciplined, and start today. 2026 can be the year your financial journey truly begins. The first step is always the most powerful, and every step afterward compounds into a future of opportunity, control, and growth. Follow a clear plan, commit to learning, act consistently, and maintain focus. This is how you turn starting from zero into building something extraordinary.